It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, the man himself, Mr. Michael Becker, the governor of Beckerville. Michael, how are you today?
Doing well, Paul. How are you?
I'm doing great. You're closing in on the end of 2018. How is your team over at SPI doing these days?
Yeah, things are going well. I was just talking earlier this week about it, and we are going to close at the end of the year. It'll be our 33rd transaction that we purchased, about 6,700 units. So kind of finishing the year out, we should have 20 in the portfolio, about 4,500 units, give or take, that'll be left of them because we sold 13. So it's been a busy few years.
So Michael, as you know, has gone from being a banker, which he was loaning money, to now with SPI, he is owning real estate. So we wish Michael and his group at SPI a lot of success. They're doing great. So a question that came in, which I thought was pretty timely, from a listener says, I hired a management company to manage my apartment building. What type of info should I be receiving from them, and what's important? And when I saw that question came in, I copied a monthly financial statement that Michael puts out from SPI that had a table of contents. And let's kind of run down that, Michael, if you could, and let's find out what's important, what you push out to your investors.
Yeah, so on a monthly basis, the management company should provide you a pretty comprehensive monthly financial package. And there, the majority are the most important things, that are included in there are the rent roll. You'll see an income statement and balance sheet, or see a trailing 12 financial statement as well. And then on top of that, you should get stuff like the leasing expirations, traffic reports, kind of where's your leasing traffic's coming from, as well as kind of like a budget versus actual, and a copy of a bank statement to kind of see all the ins and outs of the bank account and kind of, look and see where the checks are going to, stuff like that. So that's pretty much what's included in that report on a monthly basis.
Let's go through your table of contents, because I think that's important to overly communicate the status of your property than under communicate. I think when you first get into the multifamily business, you may go in as a passive investor into these transactions. And then when you put your money in, you hope that your lead or the general partner gives you information on a timely basis about what's going on. And it's better to over disclose than to under disclose. And I think Michael pushes out great information to his investors. And I want to kind of go through just your table of contents, Michael. So it's about, 15, 16 different line items, but let's kind of go through it one at a time. Financial and management graphs. What does that mean?
These are just some summary high-level graphs kind of showing some basic trends and rental rates and occupancy kind of in a graphical form, essentially.
Okay. And then leads by source.
So the same thing. So it'll kind of show you where the tenant demand, all the prospective tenants that walked in the property, kind of where did that traffic generate from? Is that from online presence, like advertising through apartments.com, or did they just drive by on the street, see our sign, stop in, and just walk into and inquired about an apartment unit?
I think that's always good to show, your investors that put money into the deal. How these people are coming to be tenants at your property. Should we be focusing on one thing as well as, should I put more money to apartments.com, or is this property on a fairly busy street that we have walk-ins, or do we have to go out and push flyers to the shopping centers? So investors want to figure out how these people are coming into the property. Number 3, expiring leases. I think that's important, Michael, for passive investors or investors to put into this deal, because we kind of show occupied units, we show vacant units, and then we show units that are going to become vacant, notice to vacate. Is that kind of what?
Yeah, so expiring leases are going out 12 months in the future and showing you how many units have leases that expire in that month. So on average, if you have most of these apartments have 12-month leases. So on average, you should have approximately 8% of your units mature every single month of your leases. But that's not always the case, because the majority of the traffic of these properties really kind of come in the spring and the summer, and there should be less traffic in say December, January, just because it's the holidays and it's bad weather. So you want to have more of your leases expiring in the best part of the year, the leasing, when there's more leasing traffic. So that's kind of generally showing what it is. The next thing that we have on there would be the kind of availability and traffic report. So that would show obviously all the traffic that we had, and then kind of not only the units that are vacant right now, but the units that are on notice to vacate. Because when we send out renewal letters, it's about 60 days ahead of time before the lease expires. So then these people will either sign the renewal or give us a notice that they have to, they intend to move out when the lease expires.
In conversion ratios, what does that mean?
So it'll kind of show the ratios both on renewals, like so you're sending out renewal letters and how many people actually converted and renewed, as well as on new leases as well. So how much traffic we have versus how many actually converted into, tenants.
And unit statistics.
These are just kind of high level snapshot of the property, kind of the occupancy, just like a box score essentially of some of the major key metrics.
It kind of shows you whether the 2 bedrooms have higher occupancy versus the 1 bedrooms, and the 3 bedrooms have lower occupancy than the 1 bedrooms. It kind of puts it all in perspective of what that market is accepting at that current rental rate. I got that rent roll.
It's pretty self-explanatory. Just a schedule of all the leases that you have on your property with the tenant's name, amount of the lease, start date, expiration date, deposit, etc.
Income statement.
And this would be a consolidated year-to-date income statement. So as we record this, we would have just done our, October financial statements as we record this thing. So it'd be the 10 months consolidated, rolled up into one financial statement.
So 12-month income statement.
Call that as like a T12. So we're just going back the trailing 12 months. So it wouldn't be the same as the income statement because the income statement is only for the calendar year. That T12 would go back for the previous 12 months broken down monthly. And that's what, Paul and all the banks want to see when you're financing a deal. A consolidated income statement doesn't help out your banker. A T12 does.
Budget comparisons and variances.
So the actual performance versus what we budgeted for and kind of showing by category, both in income and expenses. Were we positive or negative variance to what we anticipated?
Cash flow?
So then it's just a statement of cash flow. So it kind of takes down all your, goes down but even below the NOI line and kind of show the, statement of cash flow is basically kind of the changes in your beginning to your ending cash balance and what the source of each of those came from.
And a balance sheet?
The balance sheet is just the balance sheet on the property, kind of showing all your assets and liabilities.
And bank statements and reconciliation.
Yeah, so we also include the bank's copy of a bank statement in our deal, in our financial package, as well as a general ledger, which is the last thing on there. So people can kind of see where all the minutia that's behind the consolidated rolled up number. So I don't think too many people read all that stuff, but it's there and it's available. If they had a question, they certainly can go back and do it. And it's again to Paul's point of trying to be transparent with everything. So we should, kind of should go open kimono and then you read what you want to read, but it's there and available to you. If you do have a question, you can drill down into it.
I certainly think that bank statements are important. You want to see where all the checks were written to. Just want to make sure that there's nothing that's been written twice or 3 times. You can always go through the general ledger and the audit and go backwards on that and kind of make sure that there was no missing checks or there was no missing money from the accounts. But on every property, Michael, how many times a year will you sit down with the property management company and kind of go through this statement here?
Well, I have a meeting with, or the way we're set up every other Tuesday, I go into their office and we have a comprehensive meeting about every one of our deals, and on a daily basis, there's some level of communication about, whatever on whatever assets, not on every asset, but, if there's an issue on some of their properties is, 500 units, there's always something going on these properties. So we always have conversations. Right now it's kind of budget season. So we're going through budgets for 2019. So they've already gone through their internal process. They sent them to us. We're going to go through and try to, make sure we all agree on budgets. We'll give them feedback on certain line items. And at the end of that process, we'll have an actual budget for 2019. So we spend quite a bit of time on that at this time of year.
And now let's put your passive investor hat on. You receive a statement like this from your general partner that, the managing member, the lead in the transaction, the guy who's running the show, and you're an investor, whether it's $25,000 or $125,000, and you get a statement like this. Is it fair game to call the managing member up and ask questions about it? Tell me a little bit about what your feeling is on that.
Yeah, I think you're right. If you invest in the deal, if you have questions, you certainly should be able to ask them. Now, there's the fine line with everything in life, right? You can't monopolize just because you invest $100,000 in a deal. You can't monopolize someone's entire day over this every single month when these reports come out. So if there's something that is concerning, I certainly would think it's within your right, or it is within your rights to talk to the sponsor or the lead of the deal and ask questions about it. But be respectful of their time, especially if they're like me, we do this for a living, and we have almost 600 investors. So if everyone asked me a ton of detailed questions every single month, there wouldn't be enough hours in the day to get back to everybody. But you as a lead, if you do this right and you communicate on a frequent, regular basis with detailed information, usually I find the better I communicate, the less questions I get back. So it's put it upon myself to do a good job to communicate on a monthly basis and be transparent, and that eliminates a lot of the back end work for me.
No, absolutely. I mean, your group overly communicates to folks, but I think that's really maybe what the difference is in buying real estate in the syndication versus buying a common share of PepsiCo or IBM or Intel. I mean, you get all the financial statements on a monthly basis about what's going on, or at least you should get that. And then you have the ability to ask questions. Imagine trying to have a question sent to the chairman of the board or president or the chief operating officer of Intel or Facebook. They're not going to share any time with you. You're just one shareholder into the deal. So I think that's one of the things that I like when you invest in real estate. You have the ability to talk with folks and kind of figure out what the backstory is.
And the piece of advice I give to anyone that's an aspiring sponsor or sponsor of a deal, that one of the things that took me a little while to run. I realized this, but one of the things I kind of realized early on was when people invest money with you, you have their money, and if you don't communicate with them, they think you stole their money. So you need to communicate, and then they don't worry as much. As when people go dark on their investors is when a lot of these problems, because people just assume there's something going on if you're not being responsive. So that's be responsive, be proactive, communicate with people. And usually the questions we get are real simple, and it's something I could take 2 to 3 minutes, reply to an email, and then everyone's happy, and that's perfectly normal and acceptable.
That sounds good. If somebody wanted to get more information about what you and SPI does, what's the best way for them to get in contact?
Yeah, really, if anyone wants to find out more information about our company and potentially working with us, the best way is just simply go to our company's website, which is www.spiadvisory.com. That's SPI like spy, advisory.com, and there's a contact us form. If you fill that out, I'm always happy to have a 10 or 15-minute telephone call with listeners off the podcast.
So great information. Michael, thank you again. Again, I'm Paul Peebles. Have a great day.